Hello everyone and welcome to Financial Accounting. In this video, we will look at more business transactions using the Integrated Financial Statement Framework. Today, we will analyze the purchase of land. An integrated financial statement framework demonstrates the impact of transactions on the balance sheet, income statement, and the statement of cash flows, and the corresponding relationship among these transactions. The accounting equation is the basis for the framework. It is expressed as follows: assets equal liabilities plus stockholders' equity. You probably noticed that there were many transactions on the previous slide. These were transactions that we already looked at. I have a video explaining each transaction as well as the basics of the Integrated Financial Statement Framework. I'm posting the link to the playlist here and in the description below. Watch the videos. You will see how easy it is to understand each transaction and how those transactions affect the three financial statements. Emily purchased land for a future building site amounting to $70,000. Land is a real estate that is exclusive of any buildings or other assets located on the property. In accounting, land is a long-term or fixed asset account that reports the cost of real property exclusive of the cost of any constructed assets on the property. Land usually appears as the first item under the balance sheet before property, plant, and equipment. Cash flows from investing activities are the cash flows from purchase and disposal of investments and long-lived assets. Therefore, this transaction decreases cash from investing activities by $70,000 under the Statement of Cash Flows column. Under the Balance Sheet column, cash is decreased by $70,000 and land, which is also an asset account, is increased by the same amount. Note that since both cash and land are asset accounts, total assets amount doesn't change. This transaction decreases the balance in cash to $107,000 and increases the balance of land to $70,000. Balances of notes payable, capital stock, and retained earnings remain the same. This transaction does not have any effect on the income statement. Let's check whether the accounting equation balances after all these transactions. Remember that assets must be equal to liabilities plus stockholders' equity. The accounting equation must always balance, as every asset that a business owns has been acquired solely from the funds that are supplied by its owners or creditors. Total assets equal $177,000. Total liabilities equal $40,000. And total stockholders' equity equals $137,000. The accounting equation balances. Note that the ending balance in cash on the balance sheet is the same as the ending balance in cash on the statement of cash flows. That's all for today. In the next video, we will look at cash dividends. I hope you found this video helpful. If you did, please subscribe, hit that like button, and ring the notification bell so you're notified when we release more videos like this. Thank you all so much for watching, and I hope to see you all again in the next video.